Hey, Lars. Nice to see you. Michael. Hey, Bill, Munira, Tony. All right, we're about a minute away. Alan says, did I see Cisco fall off a cliff? No, I know Cisco is announcing earnings tonight. I didn't see what happened, but imagine, like everything's going to get taken out shot and taken out back and shot. So I'll give this a few minutes, a few seconds. I'll start in about 30 seconds. I don't think Target recovered, no. Alan says, what's the smallest time frame you use? I would recommend the daily. And the minute I say that, people say, well, can't I use an hour? Because they want to trade more. So I recommend using the daily and trading once a day. And I know nobody wants to hear that because it's not a lot of fun, but that's how you make money. So why don't I get cracking? Welcome to the webinar. This is the, I think, third of our 4-day live event, subtitled How to Capitalize on Monster Moves in the Markets and also avoid the market traps. And today was really emblematic of that, and I'll talk about that. My name again is Mark Shaw's, I'm the pattern trader. So for the last couple of days, I've been sharing with you how I look pretty much at price action to make my investment decisions. I shouldn't have, kind of qualified that. I look at price action and price patterns. Everything else is noise, although, I have a macro kind of, thesis on things, but you really can't make money doing that. So, kind of having kind of a hard time collecting my thoughts and how I want to express things. We had a huge market collapse today. Now, if you've been following any of my emails for any period of time, so this was, my parting gift for the holidays last December. So 5 months ago, this was December 16, 2021. I sent out this email. I says, while the NASDAQ index is currently trading just a few percentage points off its all-time high, with the exception of the mega cap stocks, Apple, Microsoft, etc., there's been an absolute carnage in the average NASDAQ stock. I said chinks in the armor are beginning to appear in mega cap stocks like Amazon and Tesla, which in a heartbeat has fallen over 25% and is poised to plummet much further. Now, this was 5 months ago. So, surprise, surprise, market collapsed today. But I've been kind of saying this to our members for a long time, that there is something wrong under the hood. And I've been pointing it out to our members for a long time. I said, in the chart below, you'll see the chart and analysis of the IGV ETF. This is the technology and software ETF. And to me, I said this ETF is a reflection of what is happening and what could be about to happen in the tech sector. Now, this was 6 months ago. So while we've experienced a complete rout in the tech sector thus far, it appears the party has not even started. And so this was when the IGV was about 370. And I said, I went on record many times and said stocks like Beyond Meat, Zoom, Peloton, and QuantumScape were going to crash. These stocks are now 60% off their respective highs. Now they're off about 80 or 90%. So this is what I was saying 6 months ago. This was what I was looking at when the IGV was just starting to form its pattern. So I've been trading the markets long enough where I can see these patterns starting to form in my sleep. I didn't have to see the other thing to realize that this thing was going to start rolling over. So I talked about the IGV. I talked about the IGV, the head and shoulders and the ascending broadening triangle. This is what we've been talking about for the last 3 days. And I said, penetration below the 360 price level, it was trading about 370, could result in a drop around 270. So that's exactly where we're trading right now in the IGB. Yeah, hair under 270, probably 265. I said, this would equate to a drop of 30%. And I said, I think that scenario is completely feasible. And so fast forward 6 months, here we are. So to my mind, past is prologue, meaning that these patterns are anticipatory. The market is a discounting effect. Every day I go and listen to these analysts break apart these metrics like price earnings and inventory and management and, you know, inflation is transitory and all this stuff. And that's just talk. The market is the news. Price is the truth. And, you know, the markets are an absolute cleansing effect, and they do not lie. This was last September, 2021. My email was entitled Beyond Help. That was the abbreviation for the ticker symbol BYND, Beyond Meat. And I said, Beyond Meat has formed a series of mouth-watering long-term bear price patterns. I would not be surprised to see the price of this stock cut in half from current levels. And that was when the stock was, I think, 120 bucks or something. So here was Beyond Meat at $112. And this was last September. So 9 months ago, I was predicting this stock would get cut in half. Well, I was wrong. This thing didn't drop to 50. It dropped to about $17 last week. And it was entirely based on price action and price patterns that I was seeing at the time that I, you know, made that prediction. I said, due to the very bearish price patterns inherent in this pair, I'm looking to add to my short position. So I shorted this all the way into the ground and made all kinds of unfair money just looking at the price action in BYND. This was a chart on QuantumScape, which was at $40. Now that stock's at $10. So this is basically, you know, when I see something like this today, you know, I was not surprised. You know, I started last night just layering on short positions. So I started buying call options in an inverse ETF, the SPXU. So this moves higher when the S&P goes down. It's actually 3 times levered. So today the S&P was down 3.5%. So this index was up 12%. And then I had these call options, which is a bet on the upside. And I made 175% on my bet that I placed just yesterday. Actually, a little bit more, it closed around 140. I bought these things for about 40 cents. So I made, I don't know, 300% on my money since I bought them. And then I also own the 1850. And I blew out of those today, and, you know, I'll just layer them as they go higher. So, you know, this was, as of today, 5/18. Another investment account I own. I had a whole bunch of triple Q put options. So these actually expired today. I put these on yesterday on the bet that we would have this fall today. And it was up 1,300%. I must have made, I don't know, 120 grand in these things. And then I was also in the S&P put options. You can see I own 225 of the, what is it, the 392s. I don't know where we closed today, but a lot lower. And I bought these for, I don't know, about $1.50, and they're up 500% today. And so I got out of these right at the close, and then I'll just take some money off the table and then ladder it up, you know, because I anticipate the market's going to keep going down. And then I was short Moderna. I was short Restoration Hardware from $295. Today closed, I don't know, $260. And I started shorting Tesla between 740, 750, 760 yesterday. And so that stock was down, I don't know, 70 bucks today. And we talked about that yesterday. So all told today, I made probably about 300 grand in these things. And then, you know, I've got these gold positions and pound New Zealand short. This account really didn't make much. I think gold is actually up today a little bit. So this is about where, you know, it was yesterday. But you know, hopefully these positions will go. So, you know, this didn't come out of the blue for me. I have been bearish this stock market for about a year and a half in the secondary stocks like Beyond Meat, Peloton, QuantumScape, Zoom. Those started actually topping out a year and a half ago. And it was just, till Apple and Microsoft started rolling over. That's when the indexes were rolling over. So, I talked yesterday about the S&P going to 3,600. So, when you see a move down like this was not a shock to me. So I did a little thing in the boiler room this morning. The boiler room is something that I do early in the morning. I'll share this video. So I shorted into that rally. I said, you know what? I want to just build a position because I don't want to be here when this thing breaks and goes without me. I was talking about restoration hardware. It's not really easy either, and it's still not. It still looks like maybe a rounding bottom. You can still go up, but I did short that. I did, and now I'm just going to see if I want to maybe take some profits here before these things maybe have a bolt higher. So. No, I think the market's going down too. I do. So that was me saying that, I was going to short restoration hardware right on the highs. And I'll take a look at that in a minute. But why I started loading up last night was, first off, I have a global view, which, I've been sharing with you that, I look at these markets through the prism of kind of a longer term thing to understand, if you can't understand where history is, where something is, then you can't understand where it's going to go. So if you look at a 15-minute chart, you're not seeing the entire history. So to me, this is a weekly chart where each one of these price bars represents 1 week in time. And this is a price chart going back 2 years. So instead of looking at the last 6 days, this chart gives me a window into looking at the last 2 years. And from that, it looks somewhat random. So you could say, well, it's just going back and forth. But to my mind, when I look through that, I can see a series of 2 very bearish price patterns converging at one time. One is this ascending, broadening price pattern, where effectively, when you connect all of the highs and all of the lows, you have a pattern that's been going higher throughout the history of this pattern. It starts out narrow and then widens or broaden out at the top. So that's how it gets its name, an ascending, broadening price pattern. Probably something you've never heard of. So, I have a wide dictionary of patterns I follow, but, armed with just a few, you can make a lot of money. And here was the second one, a very simple double top. You make one high, you come back, you retest that high, you come back. Now you have a double top. And so you have a convergence of these 2 bearish price patterns. And you can see that both of them, the neckline of this double top basically came here, and the lower support line came here. So this was an area, once this thing breaks through this area, now both of these are confirmed. So now I know that the market's going to go low just by virtue of the patterns. I don't need to have some analyst tell me that inflation is transitory, or we've discounted, enough of the carnage. So when, the market was kind of going up over the last week or so, to my mind, that's just the distraction. I always say the market's like a magician. He doesn't come on stage and just pull a rabbit out of the hat, right as he gets on stage. He always kind of does some distraction before he does that. So this little run up was a distraction, but that's why I keep an eye on the global view. This is telling me what's happened. So it's always interesting. And so just to finish this off, once I see that we've now confirmed this ascending, broadening price pattern, it's like having tomorrow's newspaper, because now I don't have to guess where this thing's going. It's going right here. And probably a lot further. When these things get going, they usually overcorrect to the downside. So we saw this in the IGV, and this is what I predicted in the IGV. When IGV broke 370, I said it was going to go to 260. And last week it went to 256. And now it looks poised to go a lot lower. So it's always interesting to me, when, we had all of this carnage in the last couple of weeks, when the market's going down. And so, now the market starts popping up, and I heard one analyst say, this is the bottom in the S&P. This is it. We've come off enough. I heard some guy in the network say, this is it. S&P can't go any lower. So it's always interesting to me, because if you basically just understand how to read charts, for the last 6 months, we've been just forming this double top, what I call a distribution area, where actually the insiders or the smart people have been getting out. And so I look at the market in terms of like weight, like the collective weight of all this price history is sitting on this one guy. So now you're telling me that this one guy is now going to go through all of this. It's like, to me, like saying like, if you had a 90-pound Girl Scout with a 450-pound sumo wrestler on top of her, what's going to happen? It's just going to collapse. The weight is just going to push this down. And so this is what I look at. This is just a lot of weight holding this stuff, and eventually it's just going to give in. And so, again, you can listen to all this stuff and guarantee you will not have the foggiest idea of what to do. And this is why I only look at the market. The market is always right. I'm sometimes right. I don't have to be right all the time. These guys, these geniuses, are not right most of the time, but the market is always right. And the market tells me, there's something going on here. There's something wrong going on here. So we've been programmed since 2009, 14 years, 13 years. Every sell-off has been a buying opportunity. And I think that psychology is becoming embedded. And, I think you have a whole bunch of managers on Wall Street now in their 20s and 30s. They've never really seen a bear market. And so they don't really understand what's happening or what is about to happen. I've been saying to our members for 6 months now, I said, you can use your imagination to think how far this market's going to fall. And I think it's going to exceed your imagination. I think that we're going to go into the ground. So this is Netflix. This is just a microcosm of what's happening. And this isn't a small company. This was like the top FANG company, top 6 companies in America. It's gone from $170 to $700 to $180. PayPal. These were all kind of institutional darlings just 6 months ago. So this is telling you there's something very wrong. $320 to $70. Facebook, one of the top 3, holdings of sovereign wealth funds in, Abu Dhabi and wherever. $380, sub $200. And on and on and on. And so when you look at this, when you look at a institutional holding and you see the carnage that is happening here, trying to buy these things is like trying to catch a falling knife. And I've been saying this to our members for a long time. These chart patterns, they don't lie. I shorted Facebook right here before the earnings and made, bought the puts for $5 and they went to $80. So I don't know. It's, this is telling me there is something very wrong. So I was saying in our morning sessions today, I just loaded up last night because I just felt like the market. So let me just load this up. So Apple and Microsoft and all these companies looked like this yesterday. And I was telling, before so I do this session in the morning. It's called the Boiler Room, where I talk about impending opportunities for, what's going on, and before today's opening, I started shorting everything because I don't believe in one-legged stools. And what I mean by that is you can see that we made a bottom, 4 days ago, and then just started going higher. But to me, that is not sustainable. To me, this is the magician's misdirect, right? So it's like kind of having a stool. If you have a stool with two legs, what's going to happen when you sit on it? It's just going to tilt over. And, it's the same with this rally. It's like the last 4 days. I don't believe a rally that, there are V bottoms. Sometimes you see this and what have you, but very rarely. But this wasn't one of those occasions. So this is Apple. And this was everything. This was Microsoft. This was Tesla. This was everything. Where, a couple of days ago, you went to a low and now you bounced. But to me, this was not sustainable. To me, this thing has to go down, even if it's going to go up. So it has to consolidate this low to look like something before it's going to go up. And all of these stocks look like that. You can look at that was Apple, Microsoft yesterday, same thing. Everything kind of closed on the high. And to me, it was a complete fake out. And I was just referencing that S&P. I just know the S&P has to go to 3,600. So I know this is all BS. So, here was the same thing in Microsoft, where you, sorry, let me get another color here. So if you don't see today, this is what it looked like. So, markets just don't go up off, a single low. They don't come down and then just go up like this. They've got to, do some kind of pattern, some kind of what have you. And so this was like a one-legged stool. It had to come back and consolidate this. And it wasn't really this that I was looking at. It was all the other things along the way. So it's just the patterns. And, Apple and Microsoft were the last generals to roll over. And now they're starting to come through some very major levels. And this is what I've been sharing with those in my morning session. And we've been watching these things, and I'm saying these things are sitting on a ledge. And the minute they go through here, the market's going to crack. And you can see last week we came through this very long. So this has been a long-term trend line that has held these prices in check. And then last week we started having a divergence from that behavior. Instead of bouncing off this line, it started to crash through it. But here was, this top here and the secondary top. So this whole thing to me looks like a top now. Now, Microsoft, was spoken a week ago is the strongest company on the board, the biggest market cap. It was insulated from all of this stuff. And, now we're going to see what happens. And so, if you understand price action, you don't have to listen to all of this stuff. The market will, sort it out for you. So I started shorting Restoration Hardware yesterday, and I took a bit of a loss on the position, and it was early just because there wasn't really I always look for some kind of convenient inside bar or key reversal, but this market is just kind of closing on a high and then opening, and you can't even catch it anymore. So I shorted Restoration Hardware yesterday. That video was a video from yesterday's session where I said I was shorting it. And I shorted it right in yesterday's high. Now, this thing was going higher. Why would I do that? Because again, what I look at is what is the trend and what are the patterns that are directing traffic? This to me was the magician. It was the misdirect. And my attitude is if I'm wrong here and it goes up, I'm just going to short more because this thing, it can run, but it can't hide. It was destined to go down. Why? Because the patterns, the bigger patterns tell me that. And I think I spoke about this on Monday to you guys when, Restoration Hardware was up in the 295 area. And today was down like 10% in a day. So this didn't just come out of nowhere. This rounding top up here, and then this whole thing looks like a head and shoulders, which like a man or woman's left shoulder. This is the peak, and this is the right shoulder. So kind of a funky looking head and shoulders. But this tells me, despite the huge sell-off that we've had, the starting gun just got fired today. We effectively just cracked through this neckline today. So now this just confirms this whole thing. This whole thing to me is just one big distribution. And now, you know, if you buy this thing, you're saying, okay, this guy is gonna, you know, is gonna hold up the collective weight of all of this selling. This is all selling. So now, what, you're gonna buy it and it's gonna go like that? It doesn't work like that. This is now set in motion, something that's irrevocable. Nothing is gonna change tomorrow. This reflects the collective wisdom of the market over a year. And so now the gun has just been fired. And I think this thing, people say, well, is it too late? I think this thing gets cut in half from here. Just like I said in Beyond Meat in, you know, in September when it was at 120, now it's at $25. You know, this will be a $125 stock in 3 months or 3 days, the way this thing's going. So, you know, while I was doing a little bit of a razzle dazzle on the intraday, you know, I'm saying this thing is, you know, it's got nowhere to go on the upside. So I shorted it today and it's up, I don't know, 12%. RH is, where's RH? It was down 11.89%. I'm sorry. So this was Restoration Hardware. And then, you know, the big one we were talking about yesterday was Tesla. So, you know, people get infatuated with stories, but this is where, you know, price should be your guide. You know, we've been, you know, taken by, you know, Elon Musk's charisma, and he is an innovator and an entrepreneur and whatever. But eventually, you know, a company reflects the discounted value of its future cash flows. That's it. That's what companies are. They reflect their future value. And the market's been telling us that this is starting to come apart. I've been saying all the way since up here that, you know, this is going to be a parabolic implosion. You know, this thing looked like a hockey stick. And, you know, the bigger something goes up, it comes down usually the same way. So, you know, I was saying all the way up here, this is going to be a $250 stock, which sounded crazy when it's at $1,200. But, you know, I've seen these things enough. I've seen the BS, you know, too many times. You know, I lived through 1987, you know, 2000 dot-com meltdown, 2009. And it's like every time, this time is different. You know, so the dot-com, this was innovative new technology and what have you, and the sky's the limit. And these things went to $600 a share, and now they don't even exist. 2008, the whole market was premised on Wall Street, you know, saying that housing prices can never go down. And, you know, sure enough, you had a collapse. And now you have NFTs and cryptos. They're going to change the whole paradigm of what we're going to do. And this time it's different. Well, you know, when you see like 23-year-olds driving around in Lamborghinis from, you know, some piece of NFT that they sold on the internet, you know, it's just, it's just not sustainable. And the problem is, the more we've inflated this bubble, the bigger the burst is going to be. So I said, use your imagination on how far this market can plummet, and this market will exceed that. This thing is going to be like this. And it's, you know, the patterns just tell me that, the price action and the way this thing came up. So, you know, in order to be sustainable, you know, markets should go up, they should consolidate for a while, go up, consolidate, do it in a sustained way. You know, this thing just went straight up, and it's going to come straight down. So now we're really at the moment of truth on this thing, where we're sitting right on this neckline, which is basically just a line drawn through this M top. And once you see these things, that just tells you that, it's over. And, the size of this top, if you measure from the neckline to the top here, so 700 to 1200, 500, take an arbitrary number, 60% of that, that's 300, and shave 300 off this, and you're going to be at $400. I think you're going to go lower than that, but, here's the next support, which is 550. And, so I just started shorting it last night into a high, just because I felt like it wasn't sustainable. And if it went higher today, I was going to short some more. But I had a feeling that the game is up. There's, not many times this thing can hide. And so again, when you look at this, even, long-term, relatively long-term, last 8 months, this thing looks like, well, so we could be at the bottom and ready to go back up again. So, it looks somewhat sideways. It looks somewhat ambivalent. But to me, these are just giant distribution patterns. You have the double top, head and shoulders here. We went through this yesterday. Double top, head and shoulders here. You have the double top, head and shoulders here. You have the double top, head and shoulders here. And so basically the neckline of all of those relative things is up about the $1,000, $950 area. So once it cut through here and then came back down and you did a quick retest, now the game's over. So despite the fact that this thing started going higher, here, it was these things that I'm looking at. So I look at what I call the governing price patterns. And, after this little webinar, I'll share with you my book where I lay out my 4-step process for how to break apart a trade, how to, look at a trade, and how to, find these high value targets. But my whole thing is that once I understand the direction, so this has, been in a downward direction for the last, what have you, despite the fact it's been all over the place. It's $500 lower than where it was 6 months ago. Then I look for the chart patterns that I think are directing it. And so to me, this is the guiding pattern. So when I get something like this, I just say, this is the misdirect. When I see something like this, I go, this is the misdirect. So, even on Monday when we were rallying, I said, this is a bear market and you're going to see spectacular rallies that'll blow your mind. But these are bear market rallies. And so I just look for ways for when they end, although it's not easy. You can see this thing just closed at the high and then the next day was straight down. So I would always look for something where I see a key reversal, an inside bar, something where I can see something clean. But this thing is, just on its way. And, in the last 3 days, you've had this kind of coil. You've had all of this energy kind of in the same area. And so I look at these inside bars and I was saying even yesterday, if you don't know what to do, just put a sell stop right under there at 728. And now you're in this trade and it's at 710 and looking like it's hunting for lower levels. Right now in the market, yeah, it's about 708. And so, now, it's once you understand the pattern, you understand what's guiding something, then, to me, I look at the rallies where if I'm short and there's a rally, I don't freak out. I just look at it as an opportunity. I'm just going to add to my position. And so, again, I've been saying for a long time, game is up. This has been, I don't want to get into a whole political thing and get some backlash, but this has been, one of the worst, most ideological administrations, worst economic policy. The Federal Reserve has been, asleep at the switch, and now they got to, catch up. And it's, to me, it's a really bad thing to trade fundamentals, trade, your feelings, trade. But, look, I failed Econ 101, but I can do the math. If you decrease the supply and increase demand, what's going to happen? You're going to get rampant inflation. And that's exactly what's happened. We've had a supply problem through COVID, and then this administration is taxing and regulating the crap out of companies and at the same time stimulating demand. So, no kind of secret as to where we are now. So, all of the illusions were shattered yesterday, right? So the Walmarts of the world, are low margin things. They have pricing power, and, all things are, good under the hood. So Walmart had its biggest decline since 1987 yesterday. And you can see it was just followed by another precipitous decline. And then the other leg to the stool was just kicked out today when Target announced its earnings, and you got this. So, there's no illusions about the consumer. Every day I hear how strong the consumer is. Well, when inflation's going up and gas prices are $6 and, taking away all your money, you're not going to Disney World tomorrow. You're not going on that summer vacation. So this is the story. And like I said, you can use your imagination of what this market's going to do, and it will exceed it. So let me just take a couple questions here. I really didn't want to get into a political thing, and I'm a libertarian. My viewpoint is that the less government, the better. Unfortunately, in today's world, governments are trying to control everything all over the world. And so I don't think that's a good thing. I think the markets are the purest cleansing mechanism. They're an egalitarian process. They don't know political, they don't know ideology. They are just a cleansing process. And so if a company is not following some environmental thing, or they're polluting the rivers, their customers will not consume their products, and the market and the company will have to adjust, or it'll go out of business. I don't believe that a government should impose all of these regulations on everything, because now you just cripple everything. And so I don't know, we're just going to go into a handbasket, and that's it. But you can take advantage of these markets by shorting. And if you are not comfortable going short, which is not an easy process, because the short covering things are huge, I would go to a capital preservation mode. Go to cash. There's nothing wrong with being in cash in this environment. So let me just kind of see if there are any questions. What about pound yen? I'll look at that in a minute, son. So again, I'm just trying to share with you a way to look at the markets. If it's gold, Tesla, Target, the euro yen, I look at everything through the prism of the mechanics of price and price action. And you can see even with Target, so the earnings just came out today here. But the market started telling you what the story was right here. And then you had this triple top. And then right in here, you had this head and shoulders right here. So these patterns tell you, to me, the pattern equals trajectory. Bear pattern, bearish price action. Now, it's not that simple, obviously. I've spent, decades looking at this thing. And so, what I just look at is that once I understand this, then I look at this, even though it's, huge, as just, the magician doing a distraction. And so this is easier said than done. When you see something, you think you see something, and then you get one of these and it seems so real. So this is 3 weeks where they don't let you breathe. So that's how you know it's a short covering rally. That's how I knew yesterday it was a short covering rally, because they literally don't let you out. If you get short here, they're just never going to let you out. And then you're finally going to capitulate and get out there. So there is a trick to, kind of how to do all this stuff. And so I look for a combination of the patterns, and then I wait for a set of price action that then gets me in the direction of the trends. So yesterday I talked about pound New Zealand, and that order was not triggered. So I told you that I look at a setup, but then I need the market to confirm that setup. So, yesterday I was saying that I thought pound New Zealand was going to go higher. I still do, although it could be, kind of resisting right here. It could be ready to roll over right here. But this is why, I said just put a buy stop here over the highs. And you can see this today, it didn't get there and then it fell off. So, this is a layered methodology where I see that, the setup, and then I require the market to confirm what I'm looking at. And in this case, I told our members to buy it last night and it wasn't triggered. So I actually love those days where I'm wrong, but I'm not punished for it. No harm, no foul. And so, I'm kind of looking at this thing where it's sitting right at the crest of this triangle. And this could be, the top of it. And so, I would just put a sell stop underneath here. And so, sometimes I'll just fool around, put some pending orders, here, and I'd put a buy stop above here. So that way, if you're triggered here, it's likely you could get a nice little move. And on the other hand, if it comes in triggers here, you could get another move there. So this is kind of in a neutral area. This market is kind of an up, down, sideways. I could kind of still see it going down and then up. This one's a little bit harder to call. But, you don't have to be right on every trade. Ray says, does the elite group come with training? I've never traded options or stocks. So every morning we do this boiler room where I size up the market before, the market even opens, show you what my thinking is, show you on the charts why I'm looking at doing certain things. Many times I'll enter a trade in the pre-market session. So, if the market, opens down and there's a stock I want to buy, I'll use that downward action to buy that stock at a better price. So I'll buy into weakness. Conversely, if the market is up, I'll sell into strength. And so, yes, the elite does come with training. So Anthony says, wow, the NASDAQ and the Dow dumped again. So yeah, I was saying this yesterday. So all you have to do now is look and understand this chart. So once I understood this chart, you can see the daily, all these. So once something gets mature enough and it does all its dancing, so, it breaks to a certain level, so you can see in this area, it broke down here, went up, broke down here, went up, broke down here, went up. Broke down here, went up. The more kind of razzle dazzle it does, the more time it hits a certain area, eventually it's just going to break through. And then once it breaks through, it effectively confirms this whole pattern. So that's kind of the neckline. This whole thing was a double top, head and shoulders. And then this neckline was this 4150 or 4,000, was this area. And once it cuts through here, sometimes it cuts through here, it does a retest, and then it goes in the direction. So once I kind of understood what the game was here, I look at these things as BS. I start loading up on the other side. And one of the vehicles I use is this, cute little inverse thing, which you got to just do for a couple of days, right? This is not something that is a buy and hold. So it's just when I think I see something, like I did on the S&P, I just use, this is an inverse ETF. And the ticker symbol is SP, like Paul, XU, SPXU. And so whenever I think the S&P is going to go down, this thing is going to go up. right? So this, you can see right here, there's a little double bottom here. And then there's another bottom here. And collectively, this whole thing feels like the bottom, which reflects the S&P feeling like a top. So, after 4 days of, huge downside action, I just bought these calls yesterday. So when this thing was collapsing, I started buying the $18 calls and the $18.50 calls. I bought these for like 40 cents, and now they're at $1.50. And then I don't know what I paid for these, paid even less. And I made like 3 times my money today, and I bolted out of those. So, and now I'll just layer up. Now I took my money off the table. If I get some kind of pullback tomorrow, I'll buy the 1950 calls. So, as the market goes my direction, I just clean it out, take 300% profit, look for a pullback, and then buy a higher strike price. But I don't think this is done. I think you're going to get follow through to here. I'm hoping that we get some kind of pullback tomorrow, but don't be seduced by it. It's going back up, or the S&P is going back down. So I use this as a mechanism to trade the indexes. So I'll use the triple Qs to buy puts or calls on the NASDAQ. So the triple Qs are an ETF that basically mirrors the NASDAQ 1-for-1. So if you think the NASDAQ's going up, you buy calls. The NASDAQ's going down, you buy puts. And so this whole thing has been I was saying back in November, this thing is topped right here through all of this stuff. You have the head and shoulders here. You have a head and shoulders here. This whole thing was a rectangle top. You had this common neckline. And this is what things do. Things break down. People get all excited. They retest the neckline, and then it goes bingo. And it was the same thing here with this lower neckline down here. We had this common neckline down here that crossed through this entire pattern. You broke down, you try to retest, and now once it kind of breaks this lower level, it kind of confirms that this thing's going to keep going lower. But to my mind, but you can see how these things just close on the high, and then the next day is just, the other direction. And so I use these days to start getting short, because I know it's just BS rally. So Anthony says the Fed is trying for a soft landing. Well, I think, if you look at Powell's language, he said, yeah, we're trying for a soft landing. Then he said, oh, it's going to be softish. And then now he said it's going to be freaking hard. So the balloon has been blown up so much that, now they have to raise rates at the time the economy is decelerating. So it's like just pushing the car right off the cliff. And that's, because he thought inflation was transitory last year. He said, I'm going to wait till I see inflation. Well, be careful of what you wish for. You just might get it. So he got inflation all right. Now he's behind the curve. And now he's got to kill demand. He's got to kill the stock market, kill housing prices, kill Target, so he can bring the inflation down. And that's what's happening. It's just that simple. So, we can get mired in all this conversation. The point is, how do we make money out of all of this? And that's what I try and figure out. Instead of getting, mired in all of this, Econ 101 stuff, I try and look for risk reward patterns in the market. And sometimes it pays off really big. Like today, one day I made a lot of bank. So that's what I look for, taking pieces of the middle out of extraordinary moves. So Damon says, when you say loading up, no, I don't mean intraday trading. So I wait for something. I would advise either doing your trade in the beginning where you see something, or wait till the end of the day. And I know this is not what people want to see, because you want to trade on a 15-minute thing. You want to, trade up and down and get, and if you want to do that, I would just get a small account so you can trade your brains out. And then if you want to make really big money, take an account and just look for the bigger moves in the market. My mindset is, why would I want to trade in and out of the market when, I can see a pattern here that's telling me this thing is topped, and I can take a huge chunk out of the middle of these moves. And that's my mindset, is that I want to take a piece out of the middle. And now I think you're going to get another big piece down here. So you might get, some transitory support right here at 285 in the Qs. But, I think that bounce is not going to last. All right, so I didn't want to get you guys lost in a whole side discussion here, which apparently. So Thomas says, yeah, the Dow just seems to be starting. Yeah, so this is what fascinates me, how all these guys saying that we're almost at a low. Well, to me, it feels like it's kind of just getting started, despite this carnage. When the last whatever. Going back till whatever, February of last year, you've effectively just been kind of making this whole rounding top type of pattern. So, last week, people were saying when it's going up, this, the low's been put in. Well, it doesn't work that way. When you've got a whole distribution pattern, it's just not going to slice through that like a knife through butter. There's a certain aesthetic. There's a certain way these markets go down, bottom, and then go back up. And here's the thing, and people say, well, you can't really pick the bottoms. Well, I disagree with that. I pick the tops and the bottoms all the time because the patterns tell me that. Here was your head and shoulders right there. So it actually topped out way before, and then you had all of this distraction and this noise, but it was topping out way earlier. So now this whole thing just looks like, this is just starting. So, but, if we go down and then I see a huge bar like this, I'm going to say, okay, well, like this, the market tells you when it's bottom. So that was in COVID. We went and made a new low and then closed on the other side. This is a weekly bar, right? So this went to a low for the week. And by the end of the week, it was substantially higher. It put a stake in the ground. And so sometimes, the market kind of, points in the direction it wants to go. So when it made that key reversal there, it actually pointed, hey, I want to go higher. And then similarly, you can see now that you have all of these guys saying, I want to go lower within the cadence of the pattern. So this is, what I do. I just look at price patterns and price action. And so to me, this is also a bit like the IGV and the S&P. I think you can also make a case that this is an ascending, broadening price pattern. And if that's the case, then, likely we're going to come back to, which you could do that by tomorrow, the way this thing's going, the 29,000. So, but that doesn't even look like enough. It's likely to probably even exceed that. So, so what's the bottom for the Dow Jones? I don't know where it is, but my target would be at least to 29,000, which is only 2,000 points from now. So, give it till Friday afternoon, we could be done. So that's basically what I got. What I'll do now is share with you my book, which basically goes into a little bit better detail than I have, my 5-step method for getting in the markets. It's a pay what you want proposition. So let me just put it in the chat box here. Dwight, you can put it on YouTube. So basically, it's a pay what you want. You determine what you want to pay. And the thing is, I double that amount and send it to the American Childhood Cancer Organization. So I don't make a dime. In fact, I double whatever you decide you want to pay for this. And I, make that contribution. So you're going to get something of good value that hopefully will enhance your learning and also will help kids in need. So this kind of will go through the whole thing and tell you, and you can kind of read some reviews here and what have you. So that is the handbook there. So Ziad says, I bought the book a few days ago. Excellent work. Thank you, Mark. You're welcome, Ziad. And thank you. And whatever you paid for it I think I've sent over $34,000 in contributions to the ACCO from my book royalties. So I don't make a dime off my books on the website. In fact, I double that and just send it in. It's kind of my way of giving back. So Timothy said a definite win-win, a great read. So thanks, Timothy. Yeah, it's just an online PDF, so you don't have to, it's not going to come to you in the mail. So are there any questions on the methodology, on price action, on, I don't want to, examine 1,000 charts. I do that, by the way, in a Friday thing called the Underground Trading Sessions. That's every Friday, 11 a.m. Eastern time, where I go through what I think are the opportunistic patterns for that week. And then whoever's on there can ask whatever questions they want. And I get, I analyze whatever charts or whatever people are looking to trade. How do you judge where prices will go? Adrian says. Well, again, to me, it's, past is prologue, meaning that the patterns tell me that this is going to go lower. Now, in what time frame? How is it going to get there? There's going to be 1,000 things that are going to, tomorrow it's going to go up, and you go, well, should I get out? So once I see a pattern that tells me something, then I have a certain expectation. And now here's where the trick is, right? So this is the divergence between what you can read in a textbook and the real world. And this is where, trading and, I don't want to pound my chest here, but I've discovered through thousands of hours of looking at the market that it's a function of how the markets create the patterns, but then do they actually respect the patterns? Like once I see this, then my expectation is that I should see that. If I start seeing, this start digging in here and, start going up here, and now all kinds of warning signs will start flashing that, hey, this market's not respecting this pattern. So the market is the ultimate referee. If the market starts going this way, I'm not going to say, hey, this is a double top. And I used to get really arrogant and start shorting into this and this and this, and then it goes straight up, and I'd wonder why I lost all my money. So, the market throws you a lot of different patterns. You think you see something, but ultimately the market's got to confirm what you see. And that's why I always have that trigger, like yesterday in the pound New Zealand, where the market has to confirm what I'm looking at, and it didn't. So, I can think whatever's going to go on, but I need the market to confirm it. If a pending order isn't triggered, how long would you hold? So You know, every day I send out an email where I suggest a certain trade. And if that trade's not triggered, you know, I suggest you just cancel it. And then every week I put out a weekly signal, and then that week, that signal should live for the entire week. So I've had trades where I put out an email on Sunday and my trade got triggered on Wednesday. In fact, I remember a Japanese yen trade. That's exactly what happened. And I made, you know, just a boatload on that trade. Over 3 months, I stayed in that trade for 4 months and made 500 pips in the dollar yen on a trade that I made on Sunday and it only got triggered on Wednesday. But, you know, like yesterday, you know, I sent out to my elite things. I said, look, I had a trade in Tesla that wasn't triggered. So 2 days ago, I said, put a, I got the wrong chart here. I thought it was wrong. So this is Tesla. And so I think I told you a couple of days ago that, you know, I said, put a sell stop right there at 718. But then the next day it never triggered it. It went, you know, opened lower and then went higher. So that order wasn't triggered. And then yesterday we closed right on the high at 760. And I said, look, I would just put a sell stop under, you know, yesterday's low at 728. And if you did that, you know, you're now $20 into the trade. So, you know, the market, I just use the market to put me into the market. And so I forgot what the question was, but Destin says, I trade crypto with your methods. It works better than anything I've tried. Fantastic. You could trade anything. I would trade 2 insects running up a wall if they had a daily price pattern. How can we join for the Friday class, DPS? So just message our support team. I honestly don't know how you buy all of these products. I'm just do what I do. I trade, and I have a whole team that does all this stuff for me. So just give them a holler if you're interested in the underground trading session, the Friday sessions, or anything else. After tomorrow's session, you'll get an email alerting you how to register for the elite program if you're interested in that. I'm not going to give you a sales spiel. That's not what I do. I make most of my money trading, by the way. So people ask, well, why do you do this? And it's a valid question. If I was sitting on the other side of this thing and some guy made 300 grand in a day, you know, why would you bother doing this? And by the way, these are not demo accounts, right? So, you know, you see these accounts. These are my personal trading accounts. Where is this thing? You know, I don't even know if you could make something like that up. So these are as real as a heart attack. And so whatever I tell you, I'm actually doing. I'm losing all this money or making all this money. You know, I got in early yesterday on Tesla, you know, got in at 740 and it closed at 760. And I go, you know, should I get out? And you know, I said, you know what, if this thing goes up, I'm just going to short more of it. So, you know, it's not like I walk on, you know, it's not like magic. I do lose plenty of times, but it's these days where I make so much that I can afford to throw, you know, a small amount into a put or a call or, you know, waste money here or there. Because if I can make 1,300% or 558%, you know, as I did on these options, you know, you can afford to, you don't have to be right on every trade. Dustin says, do you make so much because of adding to the position? So yes, my attitude is that, you know, now this is, you know, I understand the game. The game is up. The balloon is being popped. And so my attitude is, yeah, I'm just going to keep adding to my position. And so, you know, the way I do it is just the way, you know, I would normally. I look for, you know, a key reversal, makes a new high, close on the low, an inside bar, you know, a, you know, collection of inside, you know, days like this. And then, you know, so I'm going to be, you know, looking for this thing to go down. And then have one of these. It's not going to go straight down. Then I'm going to look for this, and then I'll just add. I'll just sell into here, put my risk there, and look to add into that position. So it's just, understanding the cards you're holding, right? So that's why, I encourage you to look at longer time frames. And every time I say look at longer time frames, people ask me, well, can you do this on a 4-hour chart or a 1-hour chart? Because, it just means that you're going to be trading a lot less. I prefer to stay in one trade for several weeks or as long as it'll have me, rather than guessing where it's going to go every day. Once I got the tiger by the tail and I'm in the trade in a good place, I'm just going to keep adding to that. So let me see if I can find. So here's a good example. So this was actually that trade I talked about, where I put the sell stop in on a Sunday and got triggered on a Wednesday, and I stayed in that trade for 4 months. So this was the dollar yen. And so this is an example of, let me just try and make this a little bit bigger. So this was the trade that I recommended on 4/23 or 22. It was on a Sunday, and I only got triggered 3 days later. So the sell stop was at 111.61. And, so here was April 25th, and I got out August 12th. So I will sit in a trade for as long as it'll have me. And I got taken out on the take profit 600 points lower. And you can see all along the way, I added to this thing at different price points, all the way down. So it's just like Tesla. I think this thing's going sub 500 minimum. So if it's trading at 700, I'm just going to keep adding to this trade on the way down. So distance, so would you move the whole stop? So yeah, I mean, the whole idea of stop losses and take profits, like I said yesterday, it's a little bit tricky because every trade has its own objective. I might put on a trade just for 3 days where I'm trying to, do a counter trend rally or take a piece out of something. But this, I think, is sizing up for a big move. And so I want to be part of that big move. I'm not really buying puts, Steve, because the puts are so expensive, but you probably could. They're just very expensive. When the market is this volatile, the premiums for puts and calls, expand. And so your leverage is not so great and your risk is bigger. So, but yeah, I mean, it would be interesting kind of to understand. So if I looked at something, let's see, 3 months from now. So we're in May. So let me look at kind of the August just for fun. What the 500. So the 500 puts for August, so what is that, 3 months from now, are $30. That means you have to pay $3,000. So every put is based on 100 shares of the underlying. So you have to multiply this 30 times 100. So that means each put is $3,000. And so basically, this would have to go to $470 because you have to subtract the premium from the strike price. So this would have to go to a minimum of $470 for you to make money. And if it closed at $501, you would lose all of your money. So even though you'd be right that Tesla plummeted, it went from $700 to $501 or even $500. By August, you would still lose all of your money. So that's why, options are, a tricky thing. You could do all kinds of things by buying a put and selling a further out of the money put and reducing your cost. So there's all kinds of things you can do. But that may be worth, I might just do that for fun, just buy a few of these things for August, because I think this thing could go to, $300. So that means you would make, 7 or 8 times your money on that bet. And you know what? I think it's a bet worth making. So I'm just saying that's very risky to do options. If you go naked, buy a put or call, you have to be willing to risk every dollar that you're paying for that. So when I bought these calls in the S&P yesterday at 40 cents, whatever I paid, in my mind, I just wrote it off. So Anthony says, you're a brave man betting against Tesla. I'm not betting against Tesla. I'm betting on a chart pattern. So, that's why people overthink things. It's like, I'm betting against Tesla. You're betting against Elon Musk. You're betting against all of this grooming. So, the last couple of years, it's been a hypnotic effect where we've seen markets just go to these ballistic levels and then they come off and they keep going, and we're being programmed. But now the program is going the other way, and the human mind is slower to catch up. So I don't make opinions or emotions. I'm just betting on a pattern and making risk reward calculations. And if I'm wrong, I'm going to get out and bet on something else. So let's see, emotions. DP says, so do you short, if not options? Yeah, I'm short Tesla. I'm short Restoration Hardware. So here you can see this little minus sign next to right here. So this indicates that I'm short right there. See that little minus sign right there, the minus next to. So I'm short 1,000 shares of Restoration Hardware. Was down, I don't know, $40 today. So I made 40 grand on that trade. And I thought I had 1,000 shares of Tesla. I have 900. So I'm gonna keep adding to that trade. So that's $800,000 worth of investments right there. And so Tesla was down, whatever, $40 today. So I made cumulatively about 80 grand just on these 2 trades. So yeah, I do short the stock. I mostly short the stock. Options, are very risky. Thomas says, do you have anything you're bullish on? No, I think this is carnage. I think they're taking you out back and shooting you, whatever you're in. So this is absolute bloodbath. I mean, the energy sector has been a place to hide out in, but I think they're going to come looking for you wherever you are. And so you can see energy kind of made a new high and looks like it's reversing here on the weekly. You can see that, energy is probably the only thing to be in right now. But, I think that this trade is getting long in the tooth, and I wouldn't be excited about getting into it right now, although I think there's still some left in that trade. So I mean, we're having, I think Procter & Gamble doesn't go 6% in a day. We were down 6%. I mean, this is a consumer staple stock. When you start seeing stuff like this, Procter & Gamble doesn't move 6% in a year, it moves 6% in a day. I mean, this is supposedly a very steady Eddie conservative way to park your money. And all of a sudden we're seeing, cracks. I started pointing out these cracks a long time ago. So now you're really, so now sometimes this is where the market can, if it stops short of the neckline, starts going up, you could be trapped in there. But, effectively, when it comes through this neckline, it will, have confirmed that this whole thing is a distribution. It's been a kind of a neckline or trading. So you can see this started break a while ago. This was your first clue when it started break down right through there. So there's nowhere to hide. These, really stocks like Costco, groceries, toothpaste, stuff that people need, put on a double top at $600 and never look back. I was just talking to a friend of mine like this, where we know somebody who's made millions of dollars buying Costco. But, here's the thing, right? So I always say the stock market takes a staircase up, but the elevator down. So this is, people will always say, well, stocks always go up over time. You should buy and hold them. And my thing is, it depends. It depends when. I think that there's, as we built this balloon, it's been increasingly risky, this buy and hold Buffett type of style investing. So, here's the thing, is that we've effectively retraced back to whenever it is, August of last year. So a year and a half ago. So that was August of 20, yeah. So August, is that August? Yeah. So this is April, March. So yeah. So 9 months ago, this took 9 months to go up and a few weeks to come down. So this is what I would say. The market takes a staircase up and the elevator down. And probably the best illustration of that was DocuSign, which in one night, in one earnings report, it took a year and a half worth of history out in one 5-minute report. I remember this because I was short. So this is DocuSign. So here, you got in whatever, right there. March of 2020. You've been looking at your newspaper, your portfolio, you watch it 3-4 times a day, and you're gratified, you're rebuilding your kitchen, you're going on vacation because you're watching your stock go like that. And in literally one day, it eviscerated a year and a half worth of work. So you need to understand what you're doing. If you're, sold a bunch of garbage by Wall Street promoters, this is what, can happen. And, I think this is emblematic of what you're going to be seeing. I mean, this is the carnage that's already occurred. Do you ever go shorter time frames than the daily? You can, but I think, again, and this is why people always say, why do I have to use it? I'm trying to understand the bigger forces at work. So this is a weekly chart. So, when I see something like this, I can understand, I got shorted into earnings because I saw that and made a kind of thing that, to me, earnings, nobody knows the earnings. But to me, people say, do you trade the news? Or he's like, the news or whatever should be a catalyst to send something in the direction that's indicated by the pattern. So this to me was a governing pattern. You basically actually tripwired it right there. Then you had a little feeble rally here, and I shorted right there. And this thing dropped $100 overnight. Actually more, probably 120. So, again, I didn't know the earnings. I'm not an insider. Didn't matter what the earnings were, even if they were bullish. There was something wrong right here. People were getting out right there. So now this is kind of like Netflix, where you kind of have a shoulder, you have a head, and then you have the other shoulder down here, and it's just, this thing's just going to get destroyed. This thing will be a $20 stock at some point. So Ollie says, love the way he broke that down. Several years of gain lost in a few days. So that is the heartbreak of the market, is that, you're lured in, and we're told this story that on average, the S&P has gone up 8% a year since 1908. That's true. What's left out of that story is that there are whole periods of time, 1929 to 1942, 1965 to 1982, 2000 to 2009, where you didn't make any money. They were called lost decades. And I think we're going into another one, 2022 to 2030. Probably won't see a new high. This is the definition of dead money, where 2 years ago you're told, well, Amazon, it's an institutional stock, it's a FANG stock, sit and, just buy and hold it. And, over time, long term, you'll be taken care of. So if you got in here in whatever this is, July of 2020, you're at the same place in March of 2022. So a year and a half, this is what's called dead money, where you've made 0% return. And then if you held any more, now you're down 20% for your troubles. So you invested here 2 years ago, and all you've gotten for your troubles is that you're down 20% and lower. So now I shorted this after earnings also, before earnings. Where was it? I forgot where it was. It's on the weekly. Oh, so why did I short this? Because this guy told me right there. So this whole thing was like a head and shoulder. This told me that it was over. Now, if you're in my boiler room, it's not just something I'm saying now because, I can see the charts and what have you. I was saying to members in our boiler room, I'm shorting this thing, before the earnings. And it dropped, $500 after the earnings. So this was, a complete trap, where you can see that the price, it started to break out here. So this is also a departure of how the markets work versus charts. Where now, people are buying this bullish breakout. And I was listening to all these analysts saying this thing's now, going to put on a new move. It's breaking out. But you could see it, these two key reversals right there. That double top started to alert you to that was trouble. And then you had another breakout in the same thing. And then once it starts coming underneath this, I'm not sure at this point, but once the market starts coming underneath this thing, then this forms a bull trap, where all these guys who chase these highs are now trapped. And whenever the market forms a trap, boy, it goes the other way very quickly. That trap got sprung, and it's over. And now, people say, well, this is one of the greatest companies. It's going to come back and what have you. This is a giant distribution. For the last years, a year and a half, people have been getting out. So you think that it's just going to end here and everything's going to be roses? It doesn't work that way. This is going to be a slow grind lower. 6 months, year, whatever. This market is just going to keep grinding lower. All right. I could obviously talk forever about this stuff, but I'm going to end it here. I'll see you back tomorrow, 4:30 Eastern time. Thanks again, and just be safe tomorrow. Thanks, Dwight.
All right. See you tomorrow, Mark.
Thanks, buddy. Thank you.